was 35 minutes. Okay. So what we want to do is we want to get the changes, basically, but we're going to be looking at this additional information and this income statement data, right? So really, we're doing the cash flow statement. The first thing I'm going to do is figure out what the change in cash is. Change in cash, it goes from 14,000 to 38,000. Okay. So what is that going to be? 24,000 increase?
Yeah.
So I'm going to call that 24,000. That's my increase in cash. And that increase in cash is going to need to be the same number that we end up with down here at the bottom, right?
Yeah.
And that's going to be called the net increase in cash. So that L here of 24,000, I'll put it in already, needs to tie out with this change in cash up here, this increase to cash, which will be called L. Okay. Then we can kind of work our way down. We want to be looking at this additional data and the changes here at the same time. So I'm going to look at accounts receivable. Accounts receivable goes from 57 down to 39, right? So what kind of change is that? You can use your calculator if you have to. Go 57 minus 39. That's an $18,000 decrease. So we'll put that in the credit column, 18,000. Okay, now on your cash flow statement, a decrease in accounts receivable is actually added back to net income. So let's see. Decrease in accounts receivable is in this C category. I'm going to put it in as 18,000. And then C becomes my cross-reference letter. So that C will match up with this $18,000 change here. Okay? Let's see what happens to merchandise inventory. Merchandise inventory actually goes up by 4,000. So that would have been a $4,000 debit to merchandise inventory. Any increase in a current asset is subtracted from net income. So on our cash flow statement, it's going to show up as a reduction to net income. So let's see. Increase in merchandise inventory would be letter D, and that was 4,000. So we're going through it real quick again, Alyssa. Okay. So that's cross-reference to letter D here. Okay. Now I might jump down to the payables. I'll take care of the payables. So accounts payable increases, and I'm looking at current assets and current liabilities. So the current payables, so that would be accounts payable and accrued liabilities. Accounts payable increases from 19 to 32. Okay, so that's a $13,000 increase in accounts payable. We'll go 13,000. Okay, and that any increase in accounts payable is added back. So let's see what labels they give us. Increase in accounts payable, 13,000. That's cross-reference letter E. So you can put letter E here. Okay. Accrued liabilities go down from 26 to 15. So that's $11,000 decrease. That's a debit. Okay. And then let's see what options they give us. Okay. Decrease in accrued liabilities, 11,000. We're going to use letter F as the cross-reference. We'll cross-reference it F. Okay. Now, I'm working both sections at one time. I'm going to look back over here. If this was my cash flow statement, I would start it off with net income. And that would come from the income statement. So 55,000 would start off over here. Okay. Now think about net income. How does it affect retained earnings, right? If you think about your retained earnings statement, you got beginning, retained earnings, and then you then you add net here. Add net income, and you subtract dividends, and that gives you your ending retained earnings. So in this case, that net income would affect my, right? It's an addition to retained earnings. So as far as my change in retained earnings goes on this balance sheet up here, that net income should have an increasing effect on retained earnings. So I'm going to put the 55,000 on the credit side as part of this change in retained earnings, and then I'll cross-reference that letter A. So that A is going to go here. That cross-references. Okay. So that should take care of the operating section. Okay. Then we would look at the investing activities. Okay. So we might want to look at the additional data here while we're looking at the change in the long-term asset accounts. Okay. Oh, we missed one thing. We missed one thing in the operating section, and that would be, remember, we always add back depreciation expense. So this 23,000 is going to get added back over here. 23,000, and that would be depreciation expense. Okay. Now, if you think about depreciation expense, when you debit depreciation expense, you're crediting accumulated depreciation. Okay. In this case, it's 23,000, right? So you would have a entry that looked like that: debit to depreciation expense, credit to accumulated depreciation. So this item B is going to be cross-referenced up here in the balance sheet to an increase in accumulated depreciation. So that 23,000 is actually that credit that I was talking about here to accumulated depreciation. So we got to drop the 23 in here, right in the credit column. And we can cross-reference that letter B up here. Okay? Make that B. Okay. So if we were to tally these up, that would be our operating net cash provided by operating activities. But they're not actually asking us to fill that number in. Okay. Now we move to the investing section. So we have a change in our plant asset here. Right, it goes from 50 to 171,000. So let's see. Acquisition of plant assets is 121. Of this amount, 102 is paid in cash, and 19 is done by signing a note. So if you think about it, the piece that's done by signing a note, it's not actually a cash flow. It's because you're borrowing money. So we got to separate that. We're going to show 102 separate from the 19, and that's why you have two rows, two separate changes. And let's see, the 102 is going to be a cash outflow for the purchase of plant assets. So cash payment for acquisition of plant assets. That'll be 102. So down here in your investing section, you can take that letter reference G1 and use it as your cross-reference up here to the 102. Okay. Now the 19 is not a cash flow, so we report that separately. We report it in the footnotes to the cash flow statement, and we show it as a non-cash investing and financing activity. Okay. We'll label that the acquisition of plant assets by issuing a note payable. Okay. So that's the G2. We might as well tie that 19 to G2 here. Okay. Now what else happens? Cash receipt from the sale of land totals 25,000. There was no gain or loss. So land was sold. There's a $25,000 sale of land. Now, when you're doing this, you want to make sure as you go along, I haven't been doing it for every account, but make sure that the math checks out. So let's check out, we'll use this as an example. Is 108 minus 25 equal to 83? You can use your calculator if you have to. Yes, that checks out. So you probably would want to go through each account and make sure that, especially the ones where there's both debit and credit in the account, make sure that it's true, right? Going from 2014 to 2015, it actually, the math works out, okay? So that one's fine. And we're going to call that, always refer back to your cash flow statement. That sale of land is a cash inflow. So you're going to have cash coming in, cash receipt from the sale of land, 25,000. Okay? And then if we were to net these two out, it would give us our cash used in investing activities. But it's funny, it's not asking for the subtotals along the way. Okay. Now we're going to do financing activities. Cash receipts from the issuance of common stock, 34. So common stock is increased by 34,000. And I'm going to eyeball it real quick. 14,000 plus 34,000 should be 48,000. Okay. So we'll come down here. And I think they mix the categories around a little bit. So here's your cash receipt from the issuance of common stock. And that's going to be 34,000. Okay. Now letter I on your cash flow statement should tie back to this, letter I. Okay. Now what else happens? Payment of note payable is 18,000. So the note payable gets paid off by 18,000. So we're gonna put that in. Now in the financing section, payment of note payable, 18,000. Okay, we got letter J. That should tie out. Letter J. Okay, now, like I was saying, we want to always check the account. So like in this case, 26 minus 11 is 15. Now look at the note payable. 18 minus 18 is 0. But they're showing an ending balance of 19. So we're missing something. And if we rewind and we really think about it, we have this G2, right? That G2 was the non-cash investing and financing activity. We actually have to put that in here because that's an increase to the note payable, 19,000. So I'm going to put G2 in here. Okay. What else happens in financing activities? And then we'll double check that, right? 18 minus 18 plus 19 equals 19. Okay. So financing activities, one more item. It says payment of dividends, 9,000. So we can put in a payment of dividends, 9,000. Now remember, on our retained earnings statement, dividends decrease retained earnings because it's beginning retained earnings plus net income minus dividends gives us ending retained earnings. So really this dividend, this 9,000 dividend amount should show as a debit to the dividends account, 9,000. And then I would check the math on that one before I go too far. I would say 224,000 is the beginning balance. So 224 minus 9,000, which is the dividend, plus 55,000, which is the net income, and that should give us 270,000. So that checks out. So we got the financing activities. It looks like we got everything. Let's go back and eyeball. Is everything referenced? Okay, so we may have missed making a couple references. Well, we didn't reference the dividend, so the 9,000 is referenced to K. So make sure you got K there. And then let's look, is there anything, oh, I see one here. That land, right? The sale of land is not cross-referenced. So that would be in the investing section. Remember, we took care of that with item H. So we're going to cross-reference that item H. Okay. I think we're kind of checked out that way. Then it's just a matter of balancing. Okay. So, gotta run. Okay. We'll see you Tuesday. Okay. We'll go ahead and add up the debits. Okay, and I'm going to add up the credits. And that checks out, right? 187, 187. And I'll also do it down here on the cash flow statement. So let's see. Okay, we'll start with 55 on the right side. I think there's one more down here. And 19. Oops. $187. And then we can do the credit side starting with 4,000. Okay. 187. Looks like we're in balance. And we can go ahead and eyeball it one more time. Make sure you got all your cross references balanced, and we'll hit check answer, and it says well done. Yeah.